Hey everybody, welcome to the free Simpler Options video. And as we're looking at this, we've got a 195-minute chart of the spiders. You know, we've had the good pop up here post talk to Congress, and since then we've just done a little bit of nothing. And what's interesting is while the markets have done a little bit of nothing, they've actually been under pressure every day, just a little bit. We've seen, tick readings that have been pretty steady to the downside. Let me change this to a daily chart, and you can see that it's just a little bit of bleeding every day, but coming down to a pretty strong support level. Now, the longer we trade along here, the higher the probability that we actually continue going lower. And so the question is what kind of trades do we want to do in this type of environment? And I'm a big fan of, at least in this environment, it's like, look, there's a time to focus on what I would just call a move that's more focused, right? It's like, wow, this thing's really trending higher. It's got a lot of activity, and let's jump on this. An example of this is Kite. When Kite broke through this, we picked it up, and this was a option triple in 2 days. It was amazing. Okay, is that the kind of opportunity that's happening right now? And the answer is no. What's happening right now is a lot of stocks are just trading sideways. Okay, so in a situation like this, the main thing we want to do is, if the market and if a lot of the stocks within that market are really having a little bit more sideways action, is just taking advantage of that. Okay, so with Netflix, the idea here is like, we're not looking to, even though there's a squeeze, we're not looking to buy calls and see if it goes higher, and we're not looking to buy puts and see if it goes lower. We're really looking at selling the call and the put outside of the expected move. So the 146 call and the 138 put is outside of the expected move. So we're, in this case, selling it for $1. We'll probably buy it back tomorrow. It's 26 cents right now, and then pocketing that. In this kind of environment where it's like there's a lot of head fakes, where people are like, oh, I think Netflix is going to go higher. I think I'll buy some out of the money calls, or no, I really think it's going to go lower. I think I'm going to buy some out of the money puts. All those folks are going to be wrong, and we actually sell to both sides. Okay, and that's what I like about this environment. Now, that's a naked straddle. For some people, if you're newer to trading or you have a smaller account, that can be scary. So you can do it as an iron condor. And in this case, you don't get as much of a credit. Here, let me move these. You're not going to get as much of a credit. So instead of a $1.07 credit, you only get 50 cents, but you can sleep at night because the risk reward on this is much more contained than over here. Like if on a naked strangle, if I wake up and Netflix is down, $30, I'm going to have a lot of pain with that position. Well, that's okay. I'm a big boy. And, there's ways to, just different ways where you're like, okay, I'm going to trade my way out of this position. I'll sell some new at the money put credit spreads, a little bit bigger size, and yada, yada, yada. But if you're newer, that's not stuff you want to deal with. So I always say, like, if you're newer, great, do the iron condor for the smaller credit and a lot less risk, and book the profit. So here, $395 there, $812 there. But the idea is, like, sell that premium, okay? The expectation is that we aren't going to see any big moves, and being able to take advantage of that while we're waiting for the next big move to set up. Now, and as a final reminder for those of you that are, if I just talked about selling some premium and you're like, okay, that sounded cool, but I'm not really sure how to do it, Chris Brecher is going to be doing a class, and this is going to be starting on March 8th at 6 o'clock Central. It's a 2-hour strategy class on not only selling premium, but doing it on Fridays where you can get the most rapid theta decay, but also how to take advantage of that theta decay to do directional trades as well. It's like on a Friday, if you're trading stocks, you're trading futures, Friday is the absolute worst day to trade. Like there's a saying, don't lose your ass on a Friday. Well, that applies to directional trading. But if you're selling premium or you're taking advantage of, there's a 4-hour window where you can take advantage of a Friday directional options trade at very, very low risk. Now you're talking fun. So Chris is going to talk about those strategies on the 8th. He's got live trading on March 10th. That's $247. That'll include this class. And then, of course, he's also got, if you're interested in his service as well. So simplertrading.com/sunset. It's going to be a fun class. See you guys there, and see you at the next update.